Gruh Finance, the March quarter profit numbers have met the street estimates, but the asset quality has witnessed a sharp improvement. Motilal Oswal in his note mentioned that the cost-to-income ratio surprised positively. They were awaiting clarity from the management on the same as well. Let's get that clarity for all the viewers on the show right now. Joining us on the phone line is the Managing Director, Mr. Sudhin Choksey. Mr. Choksey, good having you. Thank you so much for joining in. I'm not surprised that you surprised the street, but let's talk about 2 or 3 parameters before we talk about the outlook ahead. One of the notes mentioned that the cost-to-income ratio, which was down 300 basis points year-on-year, was a big positive surprise. The OPEX, which declined on both YOY and quarter-on-quarter as well, was also much lower than what the street was estimating. Congratulations on a good quarter, but can you explain these couple of points first?
Thank you, first of all. I think, as regards the cost-to-income ratio, it has gone down from, to 2 percentage points from 16% to 14%, okay, as per our records, and not the 300 basis point as claimed by you. And I think these are largely, we have, kept the cost under control because we had apprehended that, the competition, the way it was happening on the price front, there could be an adverse impact on the yield or the spreads. And the prepayment ratio also we have experienced is, on a higher side. So I think we wanted to protect the profitability, and therefore the costs were kept under control.
What about the OPEX by and large and the numbers that you've shown this time around, whatever the number may be in your records, are these numbers that are sustainable, Mr. Choksey?
No, obviously there would be, the cost-to-income ratio we will try to maintain in the vicinity of 15%. I think because that steadily we have maintained over the last 2 to 3 years. It all depends as to how the growth demand, is panning out over, the next 2 quarters, and whether there are going to be any signs of the, increase in the demand during the second half. We were estimating that the second half, the supply situation and demand should, improve. But as of date today, we still don't see that enthusiasm, rising, so that, there could be a good demand probably in the second half of the year. So I think it all depends, whether we will be required to expand our retail network aggressively or not. And I think that would affect our OPEX ratio.
Mr. Choksey, good morning and congratulations on good set of numbers. I think the other positive takeaway from the Q4 earnings was the asset quality improved quite substantially. If you could tell us what contributed to that improvement, and also tell us the NPAs in the affordable housing space, they were rising. What was the performance of that segment in the Q4?
I think as regards the Q4 improvement in the asset quality or recovery performance, I think that is almost in line with our previous year track record. In fact, we were a little surprised, with elevated levels in the Q3 results. And I think the teams have kept a focus on improving the performance during the Q4. But I think still the levels are relatively higher, because the last year our gross NPAs were at the level of 0.31, which has gone up to 0.45, even on an expanded loan asset base. And therefore, I think the challenges on the recovery front will continue for some more time. But yes, I think, it is certainly better compared to the Q3. As regards asset quality on the, CLSS, the government-sponsored scheme, I think it is too early to make any comment either way. So far, we have not experienced any adverse or, worrying situation. Probably there would be only 2 cases under the NPA basket out of the 18,000 families which we have financed so far.
Mr. Choksey, before we let you go very quickly, what sort of disbursement and loan growth are you targeting for FY19 now?
I think the loan asset growth, as you would have seen, would depend also on what is the competition's activities and what is going to be the prepayment situation. This year we have had an all-time high prepayment ratio, which went up from 11% to 14%. So I think that challenge will decide as to how much the loan asset growth would be. I think for the last 2 years, we have been able to sustain the loan asset growth at 18 to 19%. So we'll continue to work on a target of 20 to 25% loan asset growth. But I think that's going to be challenging, in the current environment. So I think safely, I would say, I think we should be able to sustain in the vicinity of 18 to 19%.
Great. Mr. Choksey, congratulations on a good quarter. Thanks so much for taking the time out and speaking with us today on Bloomberg Quint.